Hey, all, Sean Maloney, Digital Business Masters, another weekly look at all things strategy inside the digital assets and sound money space. This is the most valuable information in the world, there's no question about it. Once you get this bit right in your life and you're able to stay the course to obviously manage it so that it stays right, then you'll find a lot of the challenges you see around the world being overcome by you and your own household and your own family. Okay, it's a big problem in society that most people don't understand the difference between currency and money, and therefore have major challenges that build up over many, many decades. And that's the way things have been since 1971. So understanding that is the first thing, and then obviously converting that into mastering what it takes to maintain all that and push through is an entirely different thing. So we'll talk about that in part two. Not here to give you any financial advice. We set the DBM Academy up basically because we saw that there was huge opportunity. We live in the most amazing times to be alive ever in human history. And to be able to interface with each other like we're doing right now and convert that interface into value for other people and education for other people and awareness and traction and encouraging control in people's own lives is an absolute blessing. But it all demands education, not financial advice. Okay, the financial advisors, they've not done a very good job for the majority. They've done a great job for the minority, but not the majority. So it's a case of making sure that we do our best to set a new method of operation. And a lot of that's done in the online space because we can. It doesn't have to be in the online space. You can carry on with your day job. You can carry on with your business in normal business, if you will. But without a shadow of a doubt, there are so many ways now to create incomes in the online space. And it all just depends on your appetite, your drive, your determination, your skill set, whatever it is you want, right? But what we try to do at DBM is define a model. Okay, it's been nurturing and it evolves all the time. Of course it does, because the space is dynamic. We focused a lot originally on just accruing sound money assets, all right, predominantly gold and Bitcoin. And about 6 or 7 years ago, we figured out how we could convert some of the equity into variable incomes, as we call them now, okay, because they are very difficult to pin down, because you are basically operating as a startup investor, a fintech investor, you know, in this digital space. There's no question of the direction of travel, but it's a case of making sure that we, are aware that that is a space that is variable. Okay, it is just the way it is. And they come in bursts and they'll go sideways for a long time. They'll come in bursts. So we're very much learning that process, as we have done for the past 6 or 7 years inside the academy. So more recently, we've added the fixed income elements again. We came from fixed income elements back well over a decade ago, working in e-commerce, working in dropship, working in general SEO, online marketing type stuff that we were doing. And we got more and more into blockchain and crypto since 2015. But the fixed income now is becoming very interesting because of predominantly AI technology. So the ability we have not to be hit sideways, most people talk about losing a job because of AI or, being out competed by AI and losing a whole business. What you can actually do is be part of the evolution of AI. Okay. So there's a lot of fixed income opportunities there. But again, it takes nurture, it takes, resilience, and it takes some patience to get yourself set up. We talk all about that in the Wealth Builder series. You'll find the link below. And in module 5, equivalent to month 5, is when we go into great detail about what's on this slide. So if you're keeping up with that, well done. If you're not yet aware of how the model works, then plug into the Wealth Builder series. It's only $25 to get started, and you will be able to catch up with where we are. We are on the more traditional end, balance sheet end of what we do. Obviously, we accrue Bitcoin. We've always done that. And it's a case of making sure that we understand where Bitcoin's headed. Okay, we're in a big transition at the moment, a huge adoption transition. Okay, there's lots of gamma around the place and lots of things being held up, lots of market making going on. So it's an unusual time. It's not something we've experienced before, but it's a lot easier to understand than where we were a decade ago when it was purely retail in Wales and all sorts of shenanigans going on. These days, it's much more formalised. So we still do what we've always done in terms of dollar cost averaging and enjoying equity. And as I said, we've got years of experience now in how to identify yield and push equity into yield and looking at smart contracts and decentralized finance and all sorts of closed loop altcoin ecosystems that create equity and yield in the same cycle. Again, it's not for everybody. Most people are going to get a little bit knocked sideways with what it takes to not only go into a new market, but also to maintain confidence and, resilience in it. I get that. So that's why a lot of people stick with fixed incomes and do this as a bit of a sideline until things start to move. But the main thing that we do these days in the academy, alongside the teaching, is supporting. Okay, there's a lot of support needed to keep people plugged in, to get people up to that skill level that's necessary in order for you to maintain what it takes to run a blockchain factory. So that's the overview. As I say, all that is potted and put together in one neat package called the Wealth Builder Series. We've taken, the coaches we have globally, and we've worked with many, many coaches over the years. We've brought together all those decades of combined experience and distilled them into one neat Wealth Builder Series as we sit today in 2026. Yeah, obviously it'll keep evolving and improving and evolving and improving. But the beauty of AI is that we can do that at relatively low cost, and therefore the price of entry can be relatively low. So you can get involved with this very, very easily for $25 a month and then build up from there to get more and more access to, the human end of what we do. So it's working well. I'm very proud of it. And we're delighted so many people are getting so much value from this series at the moment. Now then, to cut to the chase, let's have a look. It's been a very, very busy week, as we thought it would be. We had a little thing called Davos going on last week. A lot of theatre. We'll touch on it more in the political section. But there's no question that the world has shifted completely. We've been tracking Davos since 2008. We're really very, very aware of what the World Economic Forum has been up to. And we've tracked behaviour. We've tracked sentiment. We've tracked all, the information coming out of the very top of the politics and business environments. And this last year, particularly, the whole thing has shifted. There's just no question about that. Okay? Now, there's still a lot of theatre. Yeah, a lot of theatre, especially as the media doesn't have the skill or the insight or the ability to properly reflect and report on top-end macro economics. It just tends to go with the sound bites all the time. And what does the average voter do? They fall for the sound bite. They make it personal. They get very, party to party. That's not what it's about. You've got to look really way below that and get into the roots of what's going on. So we made some observations, far from exhaustive here. I mean, you've probably got your own observations, but this is what we picked up on just as headlines. That's part of what this workshop is about every week, is just to give people headlines, but quite extraordinary. I've never known anything like it in all my years in business, let alone digital business over the past decade or so. Quite extraordinary. A lot more being said about what we've been involved with since we started dollar cost averaging Bitcoin well over a decade ago. Yeah, a lot more going on. So if we'd have said to ourselves 10 years ago or even 5 years ago that one of the main talking points now within the environment of Davos, obviously they're changing the guard. Yeah, there's a new chair there now. Some might say thankfully, some might say it doesn't really matter. They're all part of the same cauldron. But at the end of the day, there's a huge amount going on with digital assets, which is fantastic for those of us who saw it early. So Coinbase are a big player over there, okay, and are leading the charge in many ways from the US political side of things, but they had a big voice over there in the Davos arena as well. They're saying that banks are lending customer deposits without their permission. Now, that's a big statement to say. We know they're going through at the minute the Clarity Act, etc., in the US, and they're bouncing off each other. I reported on this last week. You've got two things going on with the SEC and the CFTC, the asset managers and the banks, right? There's a standoff going on there right now. Whether that is actually anything more than theatre, we'll find out, right? Because the average person won't look at that, let alone have the ability to make the distinction between those two entities or those two industry classes. So it doesn't really matter. All that really matters is that lots and lots of people, hopefully, are getting more insight into just how much the banks have taken advantage of them over the past 5 decades plus. And now it's a case of having alternatives. And that's really where, the likes of Coinbase are coming from. In the meantime, American banks are determined to stop the stablecoin yields. This is what I'm talking about, okay? So the US lobby reveals blocking stablecoin yields is a top 2006 priority for the American banks. The ABA argues that stablecoin payments could become deposit substitutes. Now, they're petrified of that, obviously, because they have been the only game in town. Yeah, people still to this day, I don't know why, but they do, they assume that putting your hard-earned fiat currency in a bank is the only option. That is not true. And by definition of that monopoly, people just don't bother even looking at the profits that the banks make from their treasury savings, in that sense, upwards of 5%, yet they're giving only back pittance to their consumers who put the money in there in the first place. So the banks are basically buying treasuries with your hard-earned fiat currency, which is what this is all about. Because stable coins directly issue to treasury, and therefore, arguably, I guess we'll find out, they could, if they wish to, issue more of a yield, issue more of an interest rate to their customers, right? But in my opinion, I think it's all just crocodile tears, right? I think at the end of the day, they'll just move things around. The average person is just so lethargic about all this that they're not really going to be that interested what happens. Those of us who are on point and really at this, understand it. But again, we're relatively, immune from whatever comes here, because we know that at the end of the day, the only thing it really affects is sound money. And that's why you're seeing gold, silver and Bitcoin behaving the way they are right now, right? And that's really all it's about. It is that simple. So a lot of this is noise, but it's worth reporting, especially because it's coming through at the highest levels. Again, at Davos, the Coinbase CEO said that Bitcoin has a finite supply and global demand. We know that all too well. That's why Bitcoin can hit well over $1 million. We're very aware of that. We're on the track to that type of level. Yeah, it's only that way because they're printing currency. That's going to cause a lot more damage than it will beneficiaries. But at the end of the day, what do you do? What do you do as an individual? All you can actually do is understand this and then aim to own sound money and just simply let patience and time be your friend. $6 trillion UBS Bank CEO over there in Germany has just started to accept crypto and is the future of traditional banking. Okay, so you're getting a lot of slow maneuvers, at least publicly so, from European banking institutions and governments. But there's no question that there's no way back now. There's no way to put the toothpaste back in the tube. Gold and silver, if you were checking last week, quite amazing. Absolutely amazing. Well done to you guys who have been accumulating gold and silver over the past decade as well. Just look at, a lot what we do at DBM. We came from this world. We recognize that Bitcoin is much, much more effective than gold and silver. So we put a lot more focus on Bitcoin, but accumulating gold and silver as well. Congratulations if that's you. They should be declining right now, not going up in the face of higher bond yields. So the whole thing has been flipped on its head, right? So all that's telling us it's the canary in the gold mine. We did a podcast on this last week talking about the canary in the gold mine when it comes to silver. I think it's just gone past 106 today, 107, which is extraordinary. But they're not going down in price, quite the opposite. Okay, so metals provide zero yield, yet they're destroying sovereign debt. Right? It doesn't make any sense. That's not how it's supposed to work. Therefore, something's cracked, and they know it. So it's a giant red flag. Unrealized losses are mounting through the system. Bodies will inevitably rise to the surface. But as I've said, this isn't our first rodeo. Yeah, we've been through 2008. We've been through all the QE. We've been through COVID. We've been through, lots and lots of things over the past nearly 2 decades now. And while you get all these sound bites, in the end, all they do is they can't afford a recession. They can't afford to destroy the system, but they will devalue the dollar. So all they're doing here is lining things up and they will just keep printing currency. And like I said, in simple terms, it just means the value of sound assets just keep going up and up and up, right? Hence gold, hence Bitcoin, etc., etc. So it is actually that simple, despite all this noise. But Kevin O'Leary just declared that the Clarity Act, which is what we're looking for now, there is sentiment value to the Clarity Act. There's no question about that. So once that passes, at some point early this year, we're looking for that to pass. We know it's going through right now. There's going to be all sorts of reasons why, political manoeuvring, brinkmanship, all the usual stuff. They'll delay it, they won't delay it, whatever, But once it goes through, there's no question that the amount of liquidity will be in the trillions, because it just opens the door. It opens all the green flags to all the big institutional players. We spoke about tailwinds before. We've just got to be patient. Sometimes it can feel tough. Sometimes it can feel like we're just going sideways. Sometimes it feels like it's not happening quick enough for whatever you want. That's not really the point. This is a tiny microcosm of time in the journey of what we do in life, let alone in our 10-year business cycles. Okay? And behind the scenes, Coinbase, just worth mentioning, have announced the Quantum Computing Advisory Board. Again, the FUD around quantum to computer, we've mentioned it before, is nothing more than FUD. It's what used to be the environmental argument. It's now the quantum argument, obviously. As quantum comes in to our lives in the singularity, then the likes of Bitcoin and its protocol will adjust accordingly. So it's not an issue. Second page of macro this week, because there was such a lot going on, like I say, at Davos. So Cathy Wood, someone you might want to follow, very, very intelligent lady indeed, from ARK Invest. She reckons that this is the shallowest Bitcoin bear cycle in history, and it's almost over. All right. So she just laid out, we've already powered through most of the down cycle, and any dip now will test 80, 90, about where we are now. And then it will move from there, and it will be the most shallow and successful and mildest pullback Bitcoin's ever known, right? Relative to where we were, remember, only in October, we were at all-time highs at 126. I mean, people have very, very short memories. We're only a few months into that. It's been a very shallow, relatively speaking, for 4-year cycles, a very shallow pullback. So we'll see what happens next. But it's not a halving cycle anymore. There's 3 major revolutions colliding. We've already mentioned some of them. New global monetary systems competing head-to-head with fiat. That's an absolute given. If you're listening even to half of what was said in Davos last week, you'll pick that up. And the dollar, reporting today, actually, just had its biggest drop in history in terms of the dollar valuation on the Dixie. So that's very important to observe. That doesn't faze us, certainly. You might find the mainstream media just not understanding what that means at all and causing lots of FUD. And the average person will just wash over them as they get ready for the next soap opera. But at the end of the day, they need to get the dollar valuation down. They need to devalue the dollar because there's so much of it out in the world that should never have been there in the first place. So they don't want all those dollars coming home to roost in one go, because that'll completely crucify the US economy. So they're being very, very careful in how they're maneuvering with this, right? But as I say, in the end, it just means they just keep kicking the can. It doesn't matter. All these infights and all these tiny little microeconomic maneuvers, they don't matter in the macro, right? Because the whole thing at the end of the day is just print more, okay? Massive financial technology breakthroughs, yeah, we know that. We've been at this now for over a decade. Cathy Wood, we know exactly what's going on there. And it's absolutely true. AI will operate on blockchain. It has to. So that's coming very quickly, quicker than we actually imagined. The birth of an entirely new asset class with institutional firepower behind it. Overall, that's obviously Bitcoin, but there's going to be lots and lots and lots of other things that sit underneath that to move the system. Velocity of money is what it's all about. We're doing our best to identify what those are without being, cornered, as we may find ourselves with USDT, into the system too much. We want a bit of both, right? So we're looking for that. But at the end of the day, dollar cost average in Bitcoin and holding it in self-sovereignty is by far the safest place to be. Binance founder CZ just told Davos, again, more Davos stuff, that he's talking to dozens of governments all over the world about adopting Bitcoin and crypto. There's no question the tailwinds are there. Financial Times reported last week that Ledger, the French hardware people, he's working with investment bank Goldman Sachs, Jefferies, Barclays, no less, to prepare for potential IPO on the stock market this year. So that's Ledger going on to the stock market. Who'd have thought that was happening? And then last but not least, Stream, STRE, the strategy's euro-denominated perpetual fund. Those of us in Europe work with that alongside what we do with MSTR. Positions as European counterpart to Stretch, STRC, which we can't access in Europe, but obviously you can in the States. But the adoption is lagging massively, unsurprisingly, because the Europeans are so slow. They got bloody noses last week, the Europeans, in terms of their leaderships, the big cesspit of bureaucracy. What have the Europeans been doing for the past decade? And now they're being shown up in every single area, from defence all the way through to energy, all the way through to finance. And there's nobody there picking it up. All they're doing is having meetings, talking between themselves about how they're going to react next to Donald Trump. Not good enough, Europe. You're really going to have to step it up. Geopolitics, on that note, politics continues to affect short-term price. Okay, we saw a bit of that over the weekend. Okay, the US government shutdowns, the Insurrection Acts, and all these things. But as I said, none of that. That's just noise. It's all noise. Okay, don't short-term price watch. Look at the quarters and years. Okay, QE prevails over everything. That is the bottom line. Okay, so everything else, I know it gets a little bit nervy, especially when you're thinking, oh, should I buy now, should I buy that? Just dollar cost average, right? Fiat mine and dollar cost average. You'll look back on it as it's been the case since 2013, 2017, 2020, 2022. There's all these ups and downs, right? To look at the long term over on Bitcoin's price discovery, and most of all, understand the adoption of institutional money, whatever that means. Okay, they're going to co-opt Bitcoin. We know that. They probably already have co-opted it. But as long as you are self-sovereign, just like with gold, yeah, and silver, you're able to hold the cards. You're able to hold the power. That's the main thing. SEC Commissioner said live on Bloomberg, the Senate is working through the final details of how to move the Bitcoin market structure bill. We know that. Okay. At the same time, the CFTC chair saying Congress is now on the cusp of enacting the Digital Assets Market Clarity Act. Yes, we know. Get on with it. We will ensure that these markets flourish at home with tailored regulatory frameworks. Okay, so these, again, the big moves, these, don't underestimate this. This is sort of what we always wanted, because you do need those open doorways to the established TradFi system. But at the same time, the brinkmanship is just all over it, right? All over it. And you can see that being said in plain sight by the banks who don't want their precious little trick to be taken from them by these new technology rails. SEC and CFTC are to meet tomorrow, Tuesday this week, to discuss their efforts to deliver on President Trump's promise to make the United States a crypto capital of the world. Yeah, a lot of political stuff going on there, a lot of Trump ego going on there. But the fact he said it, right, and the fact he runs that country like a business and is just totally open with everything he says, sometimes way too open, in fact, downright foolish in many ways, just means that it will happen, right? Because the guy's just not going to let him go. So everybody else around him, the SEC, CFTC, and soon to be the Fed, are all basically run by the government, right? The independence is dwindling very quickly. President Trump's crypto czar, David Sachs, after the market structure passes, banks will get fully into crypto. So echoing what we've already said, huge amounts of doors opening, lots and lots of liquidity. Our job is to hold our nerve, take advantage of these opportunities, and be educated and aware and skilled for what you're going to do when it comes to managing self-sovereign assets in your own life. Scott Bessent mentioned, this was on yesterday, actually. I don't know if you spotted it on Tucker Carlson's channel. Quite extraordinary from Scott Bessent. He basically said in the same sentence, gold and Bitcoin are the stores of value. Now, we get gold. Everybody gets gold. They probably don't, actually. But people who are plugged in understand gold, the toga and the suit. But for him, the Treasury Secretary in the US, to say that on public record, that gold and Bitcoin are stores of value, in the same conversation, is just unprecedented. Absolutely unprecedented. We've known about it. We all know about it behind the scenes. We're picking up things all the time behind the scenes. But for someone at that level is extraordinary, right? And that was said off the back of a very successful digital assets Davos sentiment, right? Loads of people don't get it yet. Loads of people do get it, but are determined not to let it through. An increasing number of people, such as us, are understanding where it's headed, okay? Including China. Hong Kong to issue the first stablecoin licenses in Q1. Hong Kong's Hong Kong, right? It's a bridge for China to use to have its cake and eat it. We know that. Hong Kong's financial chief says the city will grant its first official stablecoin licenses this quarter. This quarter. So they're not sitting back. We already know that there's a gold standard being created over with the Chinese. There's lots of countries signed up for that. The only one that hasn't actually is the US. So we know that things are shifting very quickly in that regard, but nobody trusts the Chinese currency, of course, right? Because it's managed, right? So is the US currency for that matter, but that's what people think, because that's what's been happening since 1971. So it makes no difference. All that does matter is that huge liquidity pools are coming through, and that's being signified by what's going on with stablecoins in Hong Kong and other parts of Southeast Asia, by the way. Just because I am based in the UK, we do keep a little bit of an eye on this, but it's so behind the times. It's not funny. In fact, it's virginally embarrassing. It's almost as embarrassing as the Europeans, although not as quite. But people like Nigel Farage, which is one of the so-called right-wing political leaders in the UK government, he's talking about how far the UK is falling behind. No shit, Sherlock. In terms of Bitcoin and crypto, he says, and he said it publicly on Bloomberg, if we don't do things differently, we'll just get poorer and poorer. Yeah, well done. Glad you've caught up, right? He will get voted in on the next cycle. There's little doubt about that, unless something amazingly shifts within the Labour government, which could well happen with our local mayor here. But either way, they're going to have to step up. Last time I spoke to Andy Burnham about anything like this a couple of years ago, all he wanted to talk about was buses, right? If he'd have listened to what we were talking about and got ahead of it, he could have been taking some steps now and put the UK right on the front foot. It's going to go there kicking and screaming with its comfort blanket, right? It'll have to go there just like Europe. We're on the front foot, whatever happens, because we're global. We're not really interested in country to country anymore. We're way, way above that. But at the end of the day, it's good to see people like Nigel Farage actually doing this, even if he's doing it for political gain, which he probably is. $55 billion PricewaterhouseCoopers, I think it is. Forget the name of that accountancy company for 1 second. Just declared Bitcoin and crypto adoption has passed the point of no return. Again, yeah, well done, well caught up. So to wrap up, we do have all this nice and neatly put into a system, and it's a case of making sure that you take advantage of that or not. You've got two choices. I remember going back, well over a decade ago, trying to figure all this out on my own, listening to people I shouldn't have been listening to, going down all these different rabbit holes, especially in social media. And that was 10, 12 years ago. It's even more, unwieldy now. I mean, there's huge numbers of social media channels you can get stuck into. Everybody's got a freaking opinion. We've got opinion too, but we've been at it for over a decade and we're still here, right? We've achieved what it is. We're well ahead of it. We've learned how to stay ahead and stay on top of it. It's not an easy thing to do on your own, but it's a lot easier when you're working with other people, especially people who've got what you want and can prove it. So the whole idea is to work through that system, right? So the subscription system works very, very well. We'll maintain it as long as there's a marketplace for it, all right? It's not something we have to do. It's something we feel we want to do because it's good to give back. At the same time, we're trying to make things more efficient. That's why we have the Wealth Builder series. But the whole idea is for you to be working with other people. That's the key. It keeps you going, right? It's a very lonely space, this space, the online space, let alone when you start to get into sophisticated income and wealth management. So make of that of what you will. And if you're interested, click the link below and we'll see you inside the academy.